Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100, being recorded on Thursday, July the 31st at 3:20 p.m. Pacific Daylight Time. First thing you're going to notice is there's nothing sitting above the market at the moment in terms of fib levels, resistance levels. A little bit of turn of events this morning. As I initially reported, or I initially was posting, that I was anticipating and expecting additional upside with the possibility for a potential move up closer to 24,000 in within the NASDAQ. Now, that did not happen. The high came in at 23,845, and that happened at this one. Let me see when it did happen. It's showing it as today. I got to drop it down so I can see actually when that high came in. And it came in at midnight, my time, midnight Pacific daylight time. And that was at 23,845. And that was it. And then we got some numbers this morning. And then I still was anticipating the market had a chance that we were coming down a little ABC, maybe a little bit more in a fourth wave, and then rally back up in the fifth wave to finish this sub-minuet wave 5 and then also finish the minuet wave 5. So I actually had two, the sub-minuet wave 5 and then the sub-minuet and the minuet wave 5. All fifths, but I thought we had that chance. Did not come through. In fact, the market started to really tank, and it was pretty much right after the opening that it was like, this is getting pretty clear that we're not going to recover and go to new highs. So I already was in my mind thinking, okay, we're done with wave three. Where can we start putting this in? And it began to take on the shape and the scope of five waves down, which of course gives another good sign that, after a decent run, which began on April the 21st, that's when we started this rally that has taken and finished at midnight last night. It started on April the 21st, right here. So April the 21st, and that was a dynamic, and it was a really nice wave three, complete with subdivisions within its third wave. So you got that 3 of 3 move, everything that kind of goes along with the nice, strong impulse third fit right into there. And it took 3 months and 10 days to complete it. So it was actually quite good. And I thought, well, we can go a little bit more. Didn't happen. That's okay, because what we got going on now is the fact that it's like likely at the beginning stages of this minute fourth wave. So let's review that again. So what I put up initially, and it goes from the low of wave two to the high of wave three. So you're encompassing the entire third wave. We're looking for a fourth wave pullback, a fourth wave correction. Most common is on a fib basis is 0.382. And there it sits at 21,481. Now, Elliott, though, told us all about how the fourth wave, when in force, will find its terminus, its endpoint within the fourth wave of one lesser degree. We're looking at a minute four. One lesser degree is minuet, and there it is. There's that low at 22,835. So that's my first marker. Now, if I'm just going to go with fibs, the most common fib for a fourth wave is 0.382. Unfortunately, I got to take it back out to the daily so we can see where that is. 21,048. So we have 3 markers actually, and I want to add one more in here, and I'm going to put 0.146 and see what that looks like. You can see that comes in at 22,941. Bringing this back down to the hourly chart, there we have it. Look at that. It's close enough that this fourth wave of one lesser degree could still be the ticket. Now, couple of things. These measurements, these fib levels, along with that fourth wave, could be just wave A of this larger minute fourth wave. We're already looking for it to be larger because the third wave was so dynamic and it was really large. Minute degree or not, it still was large. And so this, I'm holding it to the minute degree, so which means I'm still holding this to a minute wave 4. I'm not jumping up, I'm not jumping back. I'm leaving it right as a minute wave 4. We're already running models that are saying and dictating to us that the market is likely going to continue to surge higher and could do so through the end of the year. Now, I have discussed, and I will discuss again now, that there is that possibility that the time factor will be revised as more information, as more market trade, and then we get that same algorithm to run it again, scrape everything up and run it and produce it again to let us know, could that also be happening by October versus December? So that really changes the dynamic a little bit because we'd be looking for a low um, for this wave 4 to come in maybe by October. But we have August, we have September. So we could be coming in there, and then we get the surge in October versus December. And then still we start a much larger, because we still have that minute fifth wave, up to new all-time highs, no matter where this fourth wave stops and finishes, whether it is going through August into September. And then we have October, November, and December. Don't forget, this third wave that we just finished started on April 21st. So we have May the 21st, June the 21st, July the 21st, 3 months. If we can finish this fourth wave, if we carry it out into September, which I think there's a fair shot of doing just that, then we still are going to be on track to surge into December. We're just going to be starting it earlier, but the straight surge via a third wave possibly could come into December. So this time frame still works. The minute degree still works. Everything seems to be falling into place. So I have no reason to push beyond what I've already stated in terms of what looks like we hit that. In fact, I did mention it in this morning's update. We run the risk, or we not that we run the risk, we run the possibility that that Globex high finished minute wave 3. Now I'm marking it as such. Let's see what we get. We are now still coming, we're coming back down again. So internally, I think we might have, let me go down to the 15-minute. I can show it a little bit cleaner. We got 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3. And I can bring it down, so let's try to clean it up. Taking out the extremes, we're just going to look at the line chart, which is on a closed basis. So we have 1, 2, and then we have 1, 2, 3, 4, 5 of 3. And then we get a little 4, and we come back down to, I can redo that. 1, 2, 1, 2, 3, 4, 5 of 3, 4, 1, 2, 3, a little 4, and then a 5. And either that completes the 3 and we get a little bit bigger of a fourth wave, or we come back down in a fifth, and this would be wave A. Now, where am I looking for? I am looking for wave A to possibly get us all the way down to here. So we can see that when we start to count, we can't rush it. It is subdividing because that's what the market needs to do. But it's subdividing and it needs to be recognizable, and we need to allow for it. So we don't want to count it too fast. We need to be more accurate and just take our time when we're looking at this thing. Also, when we just now also add into this analysis the spot gamma levels that were actually taken out today. And again, we use the Qs. We use the Qs as our sign. And so we had the Qs close at 565, and they've already taken them down, but the high was like 576, 577. And so I think it went up actually overnight, but it didn't. But we did go above the call wall again on the opening. and then came back down through it. So we went through the call wall, we went through large gamma 2 coming back down, and then we had the volatility trigger at 566. With Q's closed regular session at 565. So we broke the volatility trigger and we were testing and challenging large gamma 3, which sat at 565. Now we're trading at 563. So tomorrow morning, when the options reopen, if we're still here, we're going to gap through 563, which is large gamma 3. And we have 562 zero gamma. These may all adjust overnight as well. And then next up with any size would be 560, which is large gamma 1 in the put wall. But we may be getting there real quick. This is my point. We may be getting there real quick. Wave A could really come down real quick, and then we get a B wave rally, an ABC rally back up. And again, because I should be able to count 5 down for wave A, which takes out that this whole structure is going to be a big flat, a big A down, B up, and they're all kind of equal in price. Or the fact that we might have an irregular B, all that falls under the flat family for corrections. And there's 13 variations that it can take from, triangles, a triangle within the triangle, a double ABC, a triple ABC, etc. Whereas the impulse, where it's 5 waves, one format, 1, 2, 3, 4, 5, and we know what can subdivide. We know where things can extend. Usually going to be inside that third wave. So, with all of that in mind, I believe that the A wave will be impulse. It'll be a zigzag. So the entire fourth wave is likely going to come in as a zigzag, which is A down, B up, C down. 5, 3, 5. That's what I'm going to be looking for. We'll see. But these gamma levels came into play today. Tomorrow, the adjustment's going to be important because we're breaking the volatility trigger. So what happens then? It is starting to signal that switch from positive to negative gamma. And when that switch starts to take place, we see that they will no longer be putting on the risk on trade. They'll be taking it off in favor of risk off trading. Remember, risk on, buy, risk off, sell. What are we seeing? More selling. Risk off. Take your risk off. And I'm going to be imagining that we probably should be able to start to see volatility tick up with some power behind it. They really knocked volatility to the floor again. And I think that they're going to find out real quick here what the result's going to be from that. So combining our spot gamma levels, if it's combining with these gamma levels are coming in, combining what Elliott is telling us, combining what the fib levels are telling us, I am going to go out on a limb and I'm going to say we're in minute wave 4. We are within the A wave of minute wave 4. That wave 4 in and of itself will be a 535 ABC, which is considered a zigzag. So it'll be A, B, C. And ultimately, we can end up definitively back into this window, which fits again what Elliott told us. This is going to first line in the sand, no doubt. The previous fourth wave of one lesser degree, but I think that may just be the A wave. Get a B, and then the C wave brings us closer intact with 0.236 to 0.382. It should all start to fit together, and that's kind of what I'm going to be looking for. In the meantime, though, when I bring it back down here, we're looking at this continuation to the downside. And I'm looking forward to at least break below 23,290 before we get any kind of a serious rally, which may just begin to take us back up. On the way back up, we're going to have, let me take it back out because I'll show you what I kind of do. Sometimes I look to here. And so if I'm looking at 1, 2, and then 1, 2, 1, 2, 3, 4, 5, a 3, 4, 1, 2, 3, 4, 5, 3, and I can put that 3 down here. Then what am I looking for? I'm looking for a fourth wave. Again, this is all within side of everything that we're seeing here. And so we have that potential. Now, here we have, this is on a 15-minute chart, but here we have the 30. Here we have the 20 all the way down here. Wow, look at that. This is the 8, excuse me, not the 20, the 8. The blue is the 30. The orangey one is the 78, and the magenta is the 200. On my 15-minute chart, the 78 is broken below the 200. The 20 is, excuse me, the 30 is broken below the 200. The 8 is broken below the 200. So we're getting in alignment on a 15-minute chart to continue to go down. Right? Moving averages start to tell the story. That's a 15-minute. We can pull that out to the hourly, and you might see it a little bit differently, but it is working its way into that same movement. On the hourly chart, we got the 8 breaking the 200. We got the 30 getting ready to go below the 78. And together, if they come below the 200, then on an hourly chart, we're in alignment to go down. We worked for such a long time with the market, with everything in alignment to go up. One day of some stronger selling, and we're getting that turn. That also feeds into risk on is done, risk off takes over. Risk off sell, risk on buy. So we got a lot of signals kind of coming in here, which should help us trade a little bit. And how it's going to help us trade is you put your picture together intraday and you're realizing like what's happening. Why is the market breaking down when we were expecting it to go higher? Well, if it starts to break fib levels on the way back down, you're decreasing, very quickly decreasing the fact that it still has potential to go up. And when it starts to break levels that it should not, i.e., this level, and this is on the close basis, that just kind of takes it out because if this is only supposed to be a small 4, it's now gone below the start of the whole thing. Well, then this is the high. Confirmed. That's the high. Market, move on. And so that's kind of my point as well. We can change, not that we're changing gears, but the market is telling us. We can't ignore these signs that the market gives us so that we can trade better. So we no longer be looking for a place to get long, and then we don't get the move and we get slaughtered. And then you do it again and you get slaughtered. Eventually you got to go, oh, it's not. I mean, upside still will happen, but the whole emphasis of the whole market is beginning to tell us we're sellers. And likely because at some point we broke volatility triggers somewhere. It could be in the individual stocks, it could be in an ETF, it could be somewhere. And you'll see it because I talk about the Qs. Qs are an ETF based on the NASDAQ 100, but their options trade far better volume than the NQ and the NDX combined. So yes, NQ and NDX still have all those same levels, but they're going to be different. And the calculation for the Qs price-wise, which is based on the same indexes here, which is trading at 23,000. And here it's trading, well, what is it trading at? 565, 63? Wait a minute. How's that figure? Don't ask, accept. So in any case, I'm putting everything back together. But with now that bias, I'm saying wave three's done, looking like it's done. And I'm accepting that right away. Does that mean this market can't turn around? No. We already know the market is going to toss us curveballs all the time. They might come in tomorrow and go like, you know what, everything we're wrong, and it's now just rosy, rosy. And let's just go buy it all the way back up. And we've seen it before, but I think that our chances are a little bit less. And the argument is building towards my new 3 has been put in place. My new 4 is underway. This is my process. I'm now detailing it for you. So again, I think we're coming down. If we're going to get, that's interesting. So we continue to go down to put that on. So let me activate that. Let me just move it down. So as it continues to move down, you move your fibs. Right? So what can we look at? If it's going to start to turn, if that's done and it's finishing a third, right? Because we did 1, 2, and now this is the 3. and we're going to do a 4, and then we're going to come back down in a 5, and that 5 again is likely to come down into this level, which is 146.146 of the whole third. So coming down in the 4, it could be wave A. All right, so tomorrow morning, U.S. employment report, everything that goes along with it, non-farm payrolls, et cetera, et cetera. And that all comes out at 8:30 a.m., 9:45 a.m. S&P final U.S. manufacturing PMI, 10 a.m. ISM manufacturing, construction spending, and consumer sentiment. We have two at the Cleveland Fed president and the Atlanta Fed president making a TV appearance. Bet it's either going to be Bloomberg or CNBC. So that's going to be it for tonight. Our next update will be tomorrow morning.